Hello, YouTubers, friends, compatriots, bootlicker shills, Nestle serfs, peasants, vassals, accountants who are chefs, and chefs who are accountants. I am a useful idiot, and today I would like to talk about cooked books, or as the industry refers to them, managed earnings. And the reason why I think this is important is because this is the foundation that our entire economic, financial, and government system is built on. Is cooked books, a business model of fraud and corruption. And let's remember that accounting is the very language of business. So therefore, anywhere where business is conducted, which is the corporations, the financial industry, our economy, and the government, that is the language they use, and it is corrupted. So I would suggest that some people think that the greatest financial fraud of history was the LIBOR rigging. Other people, of course, will suggest that it was the bank bailouts. But I think the biggest financial fraud in all world history is cooking the books. And they do it to please the stockholders, to attract new investors, to make their budgets and keep their borrowing costs low, and of course to pay executive bonuses. And that is why they do it. But unfortunately, it creates a cycle where investors can't trust the banks, lenders can't raise capital, government intervenes, the government becomes weaker with its own finances, which in turn weakens the banks, which creates this vicious cycle. And this isn't just an anomaly, and this isn't just another conspiracy theory or something where a molehill or a mountain is being made out of a molehill. This is confirmed. We have a couple of studies that came out recently, and study number 1 is of 169 chief financial officers, and they found that 20% of U.S. companies lie on their earnings reports. And of course, since they're all pathological liars, I would suggest the number is probably more likely 40%. So there's report number 1. And then report number 2 came out with the results that said 39% of financial industry insiders surveyed reported that their competitors are likely to have engaged in illegal or unethical activity in order to be successful. And this is not just a suspicion. 26% of respondents indicated that they had observed or had firsthand knowledge of wrongdoing in the workplace. And 1 in 4 believe that financial service professionals need to engage in unethical or illegal conduct in order to be successful. And 1 in 3 said they themselves felt pressures by bonus or compensation plans to violate the law or engage in unethical behavior. So here we have an industry that everywhere you look, they're cooking their books, and the only route to success is to cook your books. And this overlaps with a lot of other phenomena we see in the financial industry, including the LIBOR rigging, but also insider trading. And this report said that 16% would break the laws on insider trading if they could get away with it. But more interestingly, 60% couldn't say they wouldn't insider trade if they knew for sure they could get away with it. And interestingly enough, 25% of financial professionals think all of the regulators are ineffective, which is true. So there's not much incentive not to be unethical or illegal. So the 3 main areas that governments and banks and corporations fudge their numbers is their balance sheets, their cash flow statements, and their profit and loss statements. And of course, all of these people involved in all these sections of the economy all rely on these numbers: the balance sheet, the cash flow, and the profit and loss statement. So banks rely on these, investors rely on these, managers rely on these, regulators all rely on these numbers. And in turn, the public and the government relies on these numbers. And a lot of the standards are set by the GAAP, which is the Generally Accepted Accounting Principles, which is pretty self-explanatory. It just sets the standards of what is acceptable in accounting from small businesses all the way up to the top. And but all these corporations and all these banks and the government are all involved in all these different ways to cook the books. And that includes off-balance sheet accounting, hiding debt, special purpose entities, reducing risk and exposure, synthetic leases, where a liability becomes an asset, expense manipulation of deferred expenses, premature revenue booking, front-loading future expenses, research and development charge-offs, and pension plan manipulation. And I don't want to bog you down with too many of the technical details, but I will say that there are 8 basic methods to cooking books. So let's go down the 8 basic methods. The first one is accelerating revenues, where they book future revenues now. So that's one form of cooking the books, taking projected earnings and including them in current earnings. Then there's delayed or deferred expenses, and of course we know about that, just putting off liabilities until a future date. Accelerating expenses preceding an acquisition, and that's where they factor in the profits when they do an acquisition or a merger with another company. Non-reoccurring expenses, which are just one-time expenses, and obviously that is very easy to abuse when cooking the books. And then other income or expense, which is a catch-all for just about anything you want to dump in there. So that's a great method for cooking the books. Not putting in the required contributions to pension plans. That's a big one, and that's a huge one for cooking the books. Then, of course, off-balance sheet items, things that are shuffled around to different subsidiaries, whether within the country or outside the country. So that's a great way to cook books. And then synthetic leases, where corporations kind of lease out their own subsidiaries and hide certain assets and liabilities based on synthetic leases that basically don't really exist, obviously, synthetic. And, of course, we have tons of great examples all through this financial collapse and all this fraud that show exactly that cooking the books is at the heart of almost every event. And that includes Goldman Sachs cooking Greece's books in order to get them into the euro that's led to the problems we have now. Of course, Bank of America cooked Merrill Lynch's books to make sure that merger happened in spite of how many people suffered a lot of damage because of that acquisition. Of course, the MF Global collapse and the Peregrine collapse, that was all shuffling numbers around and cooking the books. And Bernie Madoff, a huge example of a huge scandal, all based on cooking the books. And then, in our time, we have quite a tradition of this going back 20 years, including Enron, where they counted projected earnings from the future as current income, or WorldCom, where they reduced the amount of money it held in reserve and moved this money into revenue on their balance sheets, classified operating expenses as long-term capital interest, and had nebulous things like $500 million in computer expenses. And of course, Tyco, another one, had unapproved loans, bonuses, and spending, all by cooking the books. So the CEO and the CFO and the council extorted $120 million by misrepresenting the condition of the company to drive the stock price up. And then, incidentally, they sold off $575 million in stock they weren't supposed to. So there's a lot of peripheral events and motives and details to each one of these to distinguish it. But at the heart of every one is cooking the books. And that includes the collapse of Lehman Brothers. Who doesn't remember Repo 105, where they would just shuffle their liabilities around ahead of bank regulators and investigators, and or shuffle things around from one quarter to the next arbitrarily, and shuffle things on and off their balance sheet in order to appear a lot more healthy than they were. And of course, there was legislation, just as always, to address this. Because after the corporate fraud cases with Enron, WorldCom, Tyco, Adelphia, AOL, in 2002, Sarbanes-Oxley was set up. And that was where the SEC wanted submissions quarterly and annually, and wanted to know if financial auditing controls were really working. But unfortunately, once again, the regulators are the generally accepted accounting principles, GAAP, the SEC, and the FASB, the Financial Accounting Standards Board, who are, of course, asleep at the wheel. So even though Sarbanes-Oxley was in place, it didn't stop anybody from cooking their books. And this is a case of a technique that we find not only in banks and corporations, but we find in the government. In fact, I have an attachment below that shows the reality of the defense budget as it stands. If you factor in everything that actually has to do with defense, our defense budget is actually twice what they say it is. And we also have to realize that just like the LIBOR interest rate affects every financial transaction in the world, cooking the books alters the reliability of every methodology we have for measuring economics and company strength and assets and liabilities, including it distorts the consumer price index, it distorts the producer price index, it distorts the gross domestic product, it distorts unemployment numbers, it distorts unfunded liabilities, it distorts all the projections for anything the government spends money on into the future. It distorts all the actual results of programs that the government's set up in the past. So, you know, the bottom line is that everybody knows this is going on. Everybody knows this is the foundation of our whole system, and it's at the heart of everything that's wrong, and that's cooking the books. But it is an accepted part of the business. It's called managing earnings. And in fact, the bank that oversees all the other central banks in the world and oversees the entire global banking system, the Bank of International Settlements, just last month said the financial sector needs to realize losses and recapitalize. As we have urged in previous reports, banks must adjust balance sheets to accurately reflect the value of its assets. The challenge is to provide incentives for the banks. So the Bank of International Settlements is acknowledging that everyone is fudging their numbers and cooking their books. And they say it's hard to find an incentive to get them to tell the truth. So they know exactly what's going on. And they also add that supporting this process may well call for the use of public sector balance sheets. So you know that the entire banking system in corporate America is using cookbooks. There's no way to get them to tell the truth. And the bottom line is they can always count on the taxpayer. That's what those 3 paragraphs just spelled out. So they're bearing losses and overstating their asset values, and everybody knows it. And, you know, like I mentioned earlier, it creates a vicious cycle where investors can't trust the books, and lenders can't raise capital, and then there's government intervention, and then a weak government has its finances weakened, which further weakens the banks who are relied on in this vicious cycle. So, you know, and like I say, they do it to keep borrowing costs low, to pay less taxes, to not reveal their liabilities, to maintain the illusion and confidence that their balance sheet is a fortress, and allow them to keep borrowing in the market. So, I think this is a big deal, because how are we supposed to realistically solve any of our problems when every single number available is wrong and is distorted for an agenda? Whether it's the corporations, whether it's the banks, or whether it's the government, they're all cooking their books. It's a system where all the conclusions are false. It's a culture of self-serving greed. It's a culture of the ends justifies the means. It's a confirmation of corruption and fraud, and it's a culture where corruption is the key to success. So here we have it, the financial system, the greatest fraud in financial world history, and that is the phenomenon of cooking your books. I'm Useful Idiot. Don't you be one too.